I'm Charlotte McLeod with investingnews.com, and here today with me is Byron King of Paradigm Press, which was formerly Agora Financial. Byron is a longtime newsletter writer, and he works closely with Jim Rickards. Well, thank you so much for being here.
Well, greetings, Charlotte. It's nice to be here.
Good to see you, and we're here catching up at PDAC, and we're very nearly at the end of the first day, so I think it's fair to ask you how it's been for you, sentiment you're seeing down on the show floor.
The first thing I noticed when I walked in was how few people there were. I don't mean that in a horribly negative way, but there are less people now than there were before. Fewer booths, fewer people. It's been that way all day. You've been up here doing interviews. I was down on the floor, and I've had entire areas all to myself. And it's a sign of the times. It's hard money. It's tough out there in the markets. A lot of people have just I don't want to say lost interest, but they have become more disinterested in this very, very important sector. At the same time, I'm optimistic. At the end of day one, I'm optimistic.
Okay, I think that's a good setup, and you're right. I have been stuck up here. I took a little trip downstairs in the morning, and I wasn't sure. It did seem a little bit quieter to me, and I wasn't sure if it was just early, but okay, so now we've got that set up, and I wanted to start a little bit broadly because you always have usually some interesting ideas about how you're approaching the market. So what is looking most compelling to you right now?
Right. Well, I work at Paradigm Press, and we do energy and minerals, but there's a whole nother side of us that does artificial intelligence, crypto, all those things. Those guys are doing fabulous. They can't sell enough newsletters. The public is fascinated by this. And over on our side, on my side, we're like, but don't forget the gold and the silver and the copper, The point is, you can't do all these energy-intensive AI, virtual reality, crypto. You can't do this stuff without a reliable supply of energy. And that goes back to, the primary energy sources, oil, gas, uranium, and things like copper, things like steel and aluminum, things like, silver, platinum group metals, rare earths. You can't do it. And so I think that as the momentum of technology and of crypto, et cetera, as that keeps accelerating into wherever it goes, it has to pull the basic materials, the metals with it. And just if some of that froth on the beer over on the technology side drips back onto the table, for the drillers and the diggers, we're in for some good times. And again, this is why I'm sort of feeling good at the end of the first day. There are fewer booths, fewer people here at PDAC than before, it seems to me. But I detect a sense of true competency among a lot of companies that are down there, companies that have followed, and a sense of essential optimism that they are doing the right things and that they will be rewarded.
Very interesting that you mentioned Paradigm Press has this whole AI crypto side as well. We do as well, which I never bring to YouTube, so people may not know, but I have the same feeling about how those markets are doing versus us over here in metals and mining. I think maybe what we can do is drill down on opportunities that you're seeing, maybe starting with energy, because that's something that we've talked about quite a bit in the past. And I've definitely been hearing these conversations about how AI in particular, I think Elon Musk is even out there telling us how much energy we need for this. So where are you focusing in energy?
Well, I think that the absolute sweet spot of energy to supply baseline power to the AI system, it has to be nuclear. Burning carbon, is considered bad in the world, even though China opens a new coal-fired power plant, twice a week, whatever. But, nothing. We're not talking about consistency here. We're just saying about what's going on in the world. Nuclear has had a wonderful run up. It still has a ways to go. And so right away, you need the nuclear for the baseline. You cannot run the complex artificial intelligence. You can't run the energy demand for AI and everything else off of intermittent power, off of batteries, off of windmills, pumping it into battery. That's not going to work. You need absolutely secure baseline power to make it work. Nuclear is the way it's going to happen, and so uranium is one way. In terms of who's here to what? I love uranium, or I love energy fuels. Energy Fuels. They're downstairs. Nice booth. Had a nice talk with them. I visited their facility in Blanding, Utah. Wonderful company. Wonderful, true. They're truly good at what they do, and they have a rare earth side as well, where they're in addition to processing the rocks that give you your uranium yellow cake, they're processing the rocks that can give you rare earths. So that's a nice play downstairs there.
Yeah, I had just had Energy Fuels on talking this morning, so yeah, definitely an interesting one. And okay, on the energy side as well, the last time we spoke, we did a big BRICS conversation because it was just after the BRICS meeting. And you had told me that BRICS has essentially become an energy play. So how does that component fit in with this huge growing demand for energy?
Well, yeah, I mean, BRICS originally was an invention of Goldman Sachs as a marketing tool for their products that had to do with, India and China, whatever. BRICS became a geopolitical bloc in the sense, Russia is in there. But now that they've essentially merged as of the beginning of this year, 2024, with Saudi, Iran, UAE. I mean, it's BRICS OPEC, and so BRICS is not just a geopolitical bloc. It's becoming a trading bloc, and a big element of the trading bloc is an energy bloc. When you look at BRICS, Brazil is a big oil producer. Russia is a huge oil producer. China produces energy, but they're a big oil user. Saudi, Iran. I mean, we're looking at some of the largest energy plays in the world. Iraq wants to get in, and so they control energy. And when you control the price of energy, you control the price of pretty much everything else, because food is energy, fertilizer that makes the food is energy, transportation is energy, mining is energy. Putting the diesel in the big yellow gear and digging the rocks or making the explosives that blow it all up, and the chemicals that process. That's all petroleum based, natural gas based products. So if you don't have control over the energy supply chain, you're going to have trouble in the mines and minerals supply chain as well. It all fits together when you look at it, from the high view, from the larger view.
And I think one more point on the energy side. So battery metals, lithium in particular, did not have a very good year in 2023. And I think last year there was a lot more lithium hype for sure around here. So how are you feeling about the battery metals? What are your thoughts there?
Well, the battery metals are a thing, and they are a thing, and they will be a thing. But like everything, they have cycles as well. One of the problems with lithium, for example, has been the slowdown in public acceptance of electric vehicles. Now, China makes lots of EVs. In the U.S., the U.S. has hit a wall in terms of EV adoption, by people who actually want to write a check and buy a car. I mean, a lot of people they don't want the EV. They don't want to be. They may or may not want the EV as a device. They sure don't want it shoved down their throat by a government mandate, which is what's happening. And talk to the auto dealers of the world; they'll tell you that the EVs are backing up on the lots, and there's no secondary market for them. You got things like Hertz Corporation selling off a big whack of its EV fleet because nobody wants to rent them, things like that. So that all of that feeds back into something like lithium. I mean, there was a lot of lithium hype, a lot of money flowed into lithium. There were a lot of promises, a lot of vaporware, a lot of PowerPoint, chairborne ranger kind of stuff for people slapping the screen about what we're going to do, and they didn't do it, and so it backed off. Lithium, but many other metals as well, had a tough last 6 months. The only thing that really seems to have done well in a consistent is gold. It went above 2,000 in about November of 2023, and pretty much stayed there with the exception of a day or two, a couple of days where it dropped below 2,000. But it's well back above 2,000 again. That's an inflation angle. That's a U.S. government spending budget deficit angle, national debt angle. Bitcoin has been going through the roof, but it's fun. It's funny. You have crypto people and you have mining people. You got Bitcoin, you got gold. They're sort of very related, though. Bitcoin is digital gold. Gold is de-electrified Bitcoin, so to speak. Right there. Gold will have its day, and then there's the silver slingshot right behind it. So gold, silver are always are never out of fashion.
Yeah, I had this thought over the past week where we had gold doing well, we had Bitcoin also doing well, and we do typically hear that maybe Bitcoin steals attention from gold. But I had that going through my head. I was like, well, they're both doing well right now. So, any thoughts there?
Well, they are a reflection of the Bitcoin doing well, gold doing well, are a reflection of the government destruction of currencies everywhere. The U.S. dollar, the Canadian dollar, British pound, European euro, et cetera, et cetera. You go down the list. Governments everywhere have overspent their deficit spending. The national debts are rising, what have you. And Bitcoin gold is the public's way of saying, we don't like what's going on. We don't trust what's going on. Gold is the world's central bank's way of saying, we're not sure what's going to happen, but we're going to buy gold. I mean, maybe not Canada, maybe not the United States, definitely not the United States. The central bank does not buy gold, foolishly, in my humble opinion. But central banks everywhere else, they sure are. And what do they know? They know that something wicked this way comes in terms of the future viability of currencies. Fiat currencies fail; they always do. All the historical arguments. Yeah. In terms of what do we do today? We live our life in the normal economy. We buy things with dollars. We pay our bills in dollars. We get paid in dollars. All that kind of stuff. But take some of those dollars and buy your physical gold, buy your physical silver. Invest in Bitcoin in one of these exchange traded funds that they have. I mean, there's a lot of ways to do it, but this is people opting out at least a little bit. 5%, 10% of their net worth moves into something hard like gold or silver, something digital or an electronic like a Bitcoin. But this is people voting with their money against the way things are going. So that I guess it all gets back to the macroeconomics, and it all gets back to central banks ruining the currency on behalf of the politicians who can't stop spending the money.
Yes. Okay. I like different ways of saying the same thing. I like that. And let's talk about gold a little bit more. We can leave Bitcoin to the side for now. I know you got a 3,000 gold price prediction out there, and I wondered if you could talk a little bit about that. I don't know if you have a time frame. You had mentioned some of the different factors behind gold, but maybe we just go into that.
Well, it's as we speak, it's early March of 2024. It would not surprise me at all to see gold at 2,500 by the end of the year. Gold may or may not agree with me, but it's more like what are the underlying trends? What are the underlying forces? The underlying trends and forces ought to give a lift to gold continuously as the year unfolds. I do not see the macro situation of, say, the U.S. dollar. I don't see that improving. The government goes deeper into debt by $1 trillion every 3 months. So we've got 9 more months of 2024. And so by the end of the year, instead of 34 trillion national debt, it's going to be 37 trillion national debt. If you don't have some gold now, some silver now, get some, okay? I don't know what else to say.
I think that's probably all you do need to say. And what I want to, I think, kind of start to finish up with is gold stocks. One of the questions that I've been asking people frequently these past couple of days and months is, people are out there looking at the very high gold price. They wonder whether stocks will move. I wonder if you have any insight on that and how you're approaching it.
Well, a high gold price can never be bad for a gold company. It can only... It increases the value of the reserves in the ground. It increases the value of what they pull out of the ground and sell. It increases the cash flow. Now, what happens to that cash flow? I mean, as the price of diesel goes up and the price of explosives goes up and the price of labor goes up and steel and cement. Okay, yes. But a higher gold price is never a bad thing for the gold mining companies. Now you say, but gee, the gold company share prices are way down. To which I say, yes, lucky you. Lucky you. You look at the biggest of them. Barrick is at about a 5-year low, still pays a dividend. You can think what you want about Barrick in terms of management or anything else, but they're big. And when the stock market decides that, gee, we better own some more gold in our big family offices and our big money management portfolios and stuff, a company like Barrick, a company like Newmont, they're the first go-to companies. Then you get into I'll say smaller companies, but some of them are not that small. Some of the companies that have really amazing upside leverage are small exploration plays. We saw it in the last 2 years with a company like Snowline, where a major discovery on a company that like nobody ever heard of, out in the middle of like nowhere. And I don't mean to. I've been there. It is somewhere. It's not nowhere. It is somewhere, but it's just far away. You can't get there. It's hard to get there. They've done spectacularly well. There are other companies out there, drilling, and any one of them could come in with something similar to that. So there's a lot of upside in serious gold discovery these days, and we're seeing it downstairs on the floor, talking with companies who are saying, I'm not going to so much just keep building the resource. I'm actually going to step out a ways and see if I can expand it. I'm going to really see if I can make this thing theoretically look a lot bigger, just with a couple of holes at the outskirts here. Like I said, there's a lot of positivity out there. The stock prices are down, the share prices are down, but the gold is there, the geologists are there, the drill rigs are there. Enough companies have enough money that we're going to see some really exciting things in the next year. And some of those companies are downstairs, on the convention floor today as we speak.
And it feels like we've kind of come full circle from the conference floor to the conference floor. So I'll let you go, but I do want to ask before you do go, is there any final thoughts that you would share with investors as we're heading into the rest of the year?
Well, it is so easy to be, pulled away by the momentum, the fear of missing out and all that. Oh, gee, NVIDIA did this, and oh, gee, Bitcoin's doing that. Okay, I'm not saying don't dabble in those things, but I'm also saying don't forget the basics. Don't forget the mines and the minerals. You can't do much of what the world wants to do without the basic mines and minerals. The world will need copper, lead, zinc. The world will need the rare earth elements. The world will need the nickel. The world will need the platinum group metals, the gold, the silver. It's not going anywhere, and these companies are just on absolute fire sale right now in terms of share prices. These are the kind of things that if you get into the right plays at the right points in the next year or so, the next few months, these are these things that could set you up for the rest of your life.
I think that's a really good place to wrap up on. And I also like the point, you can do other things. We should look at this, but you are allowed to go look at other.
You can drink Pepsi and Coca-Cola. That's okay. Or orange juice, whatever, but don't restrict yourself.
Okay, perfect. Thank you so much for coming on to have this quite wide-ranging discussion. Thank you. Once again, I'm Charlotte McLeod with investingnews.com, and this is Byron King with Paradigm Press.